Hey traders, welcome to, you know it, time to caffeinate and dominate. Hope everyone's having a good morning. Glad to see everyone. All right, so welcome to Charts and Coffee. Oh. Now, I hope you've been keeping an eye on well, let's jump on over to this. This is the countdown to FOMC link. If you've been following the Charts and Coffee show, our Sunday show, and gosh, any of the free videos that are on the Simpler Trading YouTube channel since the beginning of July, you're probably really familiar with these columns on this graph. Why are they so important? This is the way that we're able to visualize what the Federal Reserve is most likely to do. And when we know what the main expectation is, and whether or not we're left or right of that main column, and I'm going to show you right now. Yesterday, I mentioned, hey, the path of least resistance is still up, regardless of the FOMC minutes reaction, and even the way we closed. And the reason for that, let's bring it right back to the main expectation. This has been the main expectation almost all year long. There have been brief periods of time where the 375 to 400 column, this one right here, has taken the lead. And there have been brief periods of time, probably even briefer, that the 325 to 350 column has taken the lead. And it's a few times where even this has shown up, the 300 to 325. All you need to know, it's so easy. All you need to know is this is sort of the center, right? This is what we've expected most of the time, and likely the most likely scenario, right? That one right there. If we end up to the left, this is good for stocks. If we end up to the right, stocks are not going to like it. I mean, it really is that binary. We don't have to complicate this at all. Some things in macroeconomics can be complicated. But at this stage of a fairly mature tightening cycle, the Federal Reserve has been hiking rates. That's hawkish, that's tightening, and all this other technobabble that we love in trading and in investing and market descriptions. To the right, towards 375 to 4, equities will weaken. If we stay at 350 to 375 or move towards 325 to 350, even that 300 column showing up is good for equities. Gang, the path of least resistance is up. Recession, don't know what it is, don't care. And I do mean both. We don't know what that is anymore. We've moved the definition. We're moving around what that even means. So how am I going to react to something when I really don't know what it is? And it's never mattered anyways, quite frankly, to a trader, and frankly to an investor either. Recession proofing something is clickbait. I think you all know that, right? So what do we know? We know that to the left of the 350 to 375, it's getting a little bit more crowded. That is good for stocks. That's it, right? So this is where we sit as we are rounding out August. Now, yes, we still have that September meeting, and yes, we'll have another rate statement, and we will have the press conference. But in the FOMC minutes, the takeaway seems to be, when we get a sneak peek behind what's happening, the idea that when are we going to start to slow rate hikes was really the dominant theme, or at least what we gleaned the most collectively, the we meaning collectively around investors and traders. We've gleaned that, hey, they're ready to start tapping the brakes. Fed fund futures are reflecting that as well. And now they're even more so reflecting that notion. Equities are going to like it. Please don't think that we're going to magically pick a top. Why? Because we feel like it? Because it's gone too far? Please remember, there's no process to that. There's no process to, well, this market's overextended. Says who? Says what? Right? So maybe not says who, because a lot of who's are out there running around saying, let's short the averages, let's short, a lot of these strong stocks. Why would I step out in front of a freight train? I care too much about my money, and really, I do care too much about you all to say, look, let's pick a top. And you know why people do that? If they're right, it's very dramatic and it's very memorable. But if they're wrong, whoosh, We'll never talk of it again. You know this is true. Don't try to pick a top. Yes, I think I've woken up a little salty today, but no, maybe a little sriracha. Maybe a little sriracha. So good to see everyone as usual. Thank you as always for spending some time with us here before the bell rings. And you know what? Let's get to those questions. And by the way, are equities making a new high? No, not at all. But are we retracing some of the steps from yesterday? Does it appear that bulls are saying, you know what? Am I really scared of more downside? And the bears are saying, do we really think there's more downside? Let's see how the first 30 minutes after the bell goes. But right now, I'm not seeing any panic in any way. So this is the S&P. Here's your NAS. All right. And by the way, who is running this market a little higher? Gang, that's the London Open. That's the Asian session close. And then since 7 a.m., we're seeing the UK, we're seeing the Asian close, we're seeing the beginning of the US session, all with more risk appetite or a bullish sentiment. So the time after which price moves matters a lot, because that gives you a really good insight into who it is that's saying, you know what, I don't know that I want to short stocks today. So I hope that helps. All right, so let's get to it. And let me get some of these charts out of the way. We might use some trading view charts a little bit later on. All right, let's get into it. First up, Peter asks, would I consider trading? Okay. I get this question a lot for whatever reason. I don't trade SPX. The S&P futures are, for me, leverage. So I get why people like the SPX. There's that sexy go factor. I get it. But futures have that too. So I like the micro futures for new traders learning how to manage the leverage and volatility without getting their you-know-what's handed to them potentially by the volatility of the SPX. I don't trade SPX, never have, and my life is no less complete for having not done that, nor do I ever consider the time to expiration itself a strategy, right? So let me explain the first part. SPX, I've got alternatives that I prefer, and we have alternatives in the micro S&P that allow us to take advantage of leverage, but manage risk by way of a smaller contract. The zero DTE, 0 days to expiration. So they're cheap, and they have a lot of times some volatility associated with them. But the theta or the time decay or the days to expiration in and of itself, gang, think about it for a moment. Is time a strategy, or is it part of a strategy? Is direction a strategy? Yes. I think above all else, we have to be on the right side, on the correct side of momentum and trend. The rest of it is just different tweaks we can make to either make an option more affordable or take advantage of volatility or frankly avoid volatility, whatever the secondary thing is. But the symbol and the expiration is never a primary thing. Risk is primary, direction is primary. Does that make sense? That's just my 2 cents. So when I teach you all day trading, as I have every year for the past 3 years, we talk about time, we talk about volume, we talk about volatility, right? And of course we talk about price direction. Gang, if I don't get direction right, if that's not my primary objective, what is the underlying market trend? Where is the support and resistance that would continue to be the rungs on the ladder, on the progress of that? If I don't get that part right, gang, I'm guessing. And I respect you all too much, and I respect my money too much to sit around and guess, well, let's just take advantage of the narrow timed expiration. So again, I don't deploy that strategy, so I'm probably the wrong one to ask, but that's why I don't. Now, there might be folks who've decoded that. Cool. Not my cup of tea. You know what my cup of tea is? Futures, options, micros are great for new futures traders. Start with controlling risk, right? And then move on to minis. Let me say something else when we're talking about futures. Minis are not, nor will they ever be, small account friendly. You want to trade futures in a small account? Please, gang, please. I've seen too many traders crash and burn because they can see a very low day trading margin requirement, but they forget the tick and the volatility, the dollar per tick and the volatility is still the same. Focus on the futures of those options of those futures, or focus on the micro, and then build your confidence and get an understanding of how the futures markets work, because they are highly leveraged. They can be exceedingly dangerous for traders saying, well, I've got the 500 daily margin requirement, let's go. And then all of a sudden we get a 20-point move in the S&P on that $500 initial margin requirement. That's a $1,000 move like that. Yes, maybe in your favor, but we don't want to think that way. What if it moves against you? Always focus on the risk first, right? I hope that makes sense. And let's move on to survey says. And by the way, if you ever want to know what I do, you're going to see it in the rooms, right? There's no strategy that I'm doing off in the corner that I'm not sharing with you all. There's no tool that I'm using off in the corner unless it's in labs. What does that mean? I'm testing it rigorously, usually 6 months to a year minimum, but it's usually multiple years before I even unveil a new tool or even new strategy, but definitely new tool. So, if I'm doing something, you'll see it on my screen, friends. All right, Tesla. What are my thoughts on Tesla? All right, so Tesla is in an uptrend, right, Sue? So good eye. We've got a double green. And then if you think about Tesla, before you head on over to SPY or QQQ, take a look at the XLY. Take a look at XLY means that I am looking at what? I'm also looking at an uptrend here. So the boat in Tesla is moving higher. The tide at the sector level is moving higher. And then what is this sector heavily weighted within? NASDAQ. NASDAQ is also moving higher. By the way, gang, one of the many, many, many reasons I will say, please don't think we're going to find it, we're going to, like a broken clock, twice, right twice a day kind of thing, that we're going to suddenly pick the top in the market. Why would I want to think about where the resistance is instead of where the support is? Think about this. Once we go green, bullish momentum, bullish trend, where's the opportunity? Buying the dip, right? Buying pullbacks within the context of an overall uptrend. Yet a lot of traders think, well, in an uptrend, let me try to guess at where the ceiling's going to be and short that. Why would I want to do that? I'm fighting the tide. I'm running up the down escalator, right? Have you seen folks do that? You kind of feel sorry for them for a moment, and then you just want to sit back and watch the shenanigans. Remember that we're running up the down, or in this case, we're running down the up escalator if we think that picking tops in an uptrend is a trade strategy. No, that's a vanity play. What we want to do is say, let's do the boring thing. Anytime you're looking at the market and you don't know what to do, here's and I'm serious about this. What's the boring thing? What's the most boring thing I can do? Sometimes it's nothing, but it could be, gosh, the markets are heading higher. Why don't I wait for a pullback and buy that? Not very exciting, is it? The most boring thing is almost always going to be the simplest thing and the best thing. So the way that I look at Tesla, I love the long side. And what's the most boring thing here, Sue? I think buying a pullback. 21 exponential is in play around 858, 860. And then you've got the wave, you've got the 200 exponential there. So a lot to like when this thing goes on sale. And what do they say about sales in Wall Street? Wall Street's the only place they throw a sale and no one shows up. In fact, they're off returning their merchandise at a lower price. Nowhere on earth is that psychology normal. Yet in Wall Street, it happens all the time. Let's buy at a new high, but let's sell it, let's return it at a new low. And people wonder why the markets are so hard. Maybe because we need to think about what's the most boring thing, and do I really have a strategy behind what it is that I'm doing, right? So I would love to convince more people that no one cares more about your money than you do. Nobody. And that you can do this. You don't need talking heads telling you, even people like me. You don't necessarily need someone like me to tell you what to do forever and ever. Maybe find a mentor which is what I hope I am. And you start to learn, gosh, Rog, what are all the dumb things you did so I can avoid them, right? What are the things that are working for you right now, because you've done this for 30 years, that I can learn from? And then we want you all to be able to do this. That's why Simpler is here. And then create a community around people who are super passionate about being self-directed traders, right? That's what's so exciting about waking up every morning and hanging out with a group of traders who think, you know what, nobody cares more about my money than I do, and I want to empower myself to do this on my own. It's awesome. It's awesome. Marvel. It's not a downtrend anymore. It's still below the 200 propulsion. It's trying to turn into an uptrend. It's not there yet. However, it's hard to say the wave is not doing an admirable job of holding Marvel up. And I'm going to bet that 50 level probably has some volume at it. Let's go take a look. Is there any bit of a volume ledge visible around 50? Yeah, actually, surprisingly, no. The volume for this year and MRVL, wow, it's a little bit higher. Your point of control is at about 55, but you've got a really nice layer of volume between about 55, almost 56, down to about 53. So there's going to be some gravitational pull. That's a magnet, right? Gravitational pull. There's a magnetism there. Thick layers of volume can do one of two things. They can act as support or resistance, right? Or they can act sort of as a tractor beam where price action is going to have a difficult time getting some escape velocity. But even then, in this case, that zone's likely going to be some decent support. Not an uptrend yet, but I definitely keep an eye on it, Marcus. It's getting ready to be ready. You know what I mean? Definitely worth keeping on the radar. Dustin asked, do I see EVH? Let's stick with the trading view charts here. Do I see EVH at a good spot for an entry? Yeah, pretty good. Here's a challenge, Dustin. It's been moving higher in an uptrend. I like to see 2 days. So one day we go double green. I want to see a second day of that continuation. August 2, that would be the very earliest that I would call this an uptrend. Now, I will say on August 16, then August 17, so yesterday and the day before, we lost a little bit of the mojo because we sold off the way that we did. And I don't know that I could blame earnings, although maybe there's a little bit of that follow through from a pretty volatile post-earnings reaction. Let's take a look at some volume. Let's do the same thing we did before. Let's keep with the process, right? All right, Rob, where's that gravitational pull? Right around $33.50. The trend that was, even if for a brief period of time, was bullish. So my directional bias is also bullish, because even when we break a trend, an uptrend broken is not a downtrend, although that's common belief. Not true. An uptrend broken is chop with bullish bias. So the more that we can see an oversold stochastic, that would help a little bit, not super necessary, but the more we can see some volume levels hold, or the 34 EMA on the low hold, we're in good shape. You're in a call, so you've got some flexibility by holding a long call. Know what your paper cut is, know what your percentage-based stop for that call is. Please do not make it max debit. Please do not do that. And I hope you're not. If you've been listening to this show, that's not a risk management strategy. And so with that long call, know your paper cut. Keep an eye on the 33 and a half area. We really don't want to see traction below that, but I think you're in good shape. All right. Why the difference of indicators on the 5-minute versus the daily? Oh, difference. Sure. So they're really not that different, quite frankly. Everything that I have on the daily is also on the 5. So there's actually no difference in that regard. You can see here, I've got my multi-trend, I've got my slow stow, grab candles, Darvis. So the only thing, JR, I'll say is I have some additional tools on the 5-minute. And really the only additional tools on the 5-minute are based on time, because intraday based indicators on a daily really aren't going to help me, right? If I'm looking at one candle that's covering an entire session, a daily candle, end of day chart, what happened at 10 o'clock is really not that helpful. But on the 5-minute, it's extremely valuable. 10 o'clock, 10:30, the last hour of the day, there's psychology behind those. So what we do is we take the same template, we add just two additional tools. One is a tool that monitors the high and low between 9:30 and 10 and 9:30 and 10:30. That's the main job. That's the clearing range of the initial balance. So time-based. And the other time-based tool includes volatility, and that's my hourly price movement range. So when you look at it, there's only two additional tools in the 5-minute because time, intraday, right? Time, 9:30, 10, 10:30, 11, right? Those factors are not as important on a daily time frame. They're exceedingly important on an intraday. So they're not different as much as I just have just two additional tools on the 5. Thank you for the question. Awesome noticing. Yep, just a few key things that we add so we can understand and give context to what's happening intraday. Because remember, when we're looking intraday, we could see a personality pre-market, during the clearing, during the initial balance, for the middle of the day, for the end of the day, right? You could run into lots of different shifts in risk appetite and risk aversion. So we want to keep that in mind. One of the easiest ways to track it is with volatility and with time. So I hope that makes sense. All right. Thank you as always for being a great question this morning, by the way. Good stuff. I love you all just kind of leveling up the questions. I mean, really good stuff. And I can see some others that I missed, and my apologies, but a 20-minute show. I will see you all tomorrow. Today's Thursday. Yes, I will see you all tomorrow. Same time, same station. Be good to each other, gang. Until then, caffeinate and dominate, gang.